Oh,
All
wow.
right. All right. Good morning. Welcome back. It's been a few months, maybe even more than that, since we've done a Trading with Cody chat with the man himself, Cody Willard, right over there. How you doing, sir?
I'm doing great. Thanks for having me.
Outstanding. And we also have Bryce. Is this Bryce's first public appearance trading with Cody wise anyway?
I believe it is.
Would be.
That's
There you
Bryce
go.
Smith, head analyst.
So you hear or read about everything that Bryce has been doing. So there you go. You have a face to put
Glad
together
to be here.
with the data. Yeah, outstanding. And he also appears on the Skytles weekly crypto calls
right.
as well. Yeah.
And
we
John is
also
a
have-
subscriber.
That's right.
And John,
Yeah.
I'm just a guy. Yeah.
And
hi,
John. Good
Just
morning.
met John.
But I bet you John has some questions.
Yeah, we invited any of the subs who read Trading with Cody online in the emails to hop on and ask questions directly. We also have some emailed questions. The chat room on tradingwithcody.com is not working. The homepage is now working somewhat. But GoDaddy is, for the record, if you've read me for a long time, you know that I'm always frustrated with GoDaddy. I don't feel like they are a good service provider. And every once in a while, about once every 5 years, something like this happens where their network goes down and all of their customers, including Trading with Cody, can't access their website for a day or two. So we're doing the chat live today.
There you go. Well, I guess why not start with John since he's here?
John.
And what do you have for us, John?
Hey, yeah, I had two questions. And Bryce, welcome. I've been enjoying reading your thorough analysis, as I know Cody with all these things has maybe not quite enough time to do that. Number one is some of my other investment newsletter services have been suggesting with the debt ceiling crisis approaching, we're going through that process now, actually taking money out of money market funds and just going straight to cash. What are your thoughts on that?
I guess it's a reference to the potential of money markets breaking the buck is the term. And it's what happened in 2008 financial crisis. And as I recall, I don't think it happened for like 70 years before that or something. It was an incredibly, rare event. Longtime readers of Trading with Cody know that I have spent, 20 years, I've been writing about this stuff for 22 years. And every time there's a debt limit potential crisis, I've told people, don't worry about it. And it'll be fine. And I still basically think that, but one of the things that's different, there's a lot of stuff that's sort of different right now than at any time in the last 10 or 15 years. And that is for, the interest rates alone for the Treasury have gone from, it used to cost the United States government $200 or $300 billion a year to maintain interest, to cover the interest payments on all their debt. And now we're over $1 billion a year because interest rates have risen so much. And it's there's going to be some pressure on the government. The government spent, the United States government and even governments in most any developed country spent the last 20, 30 years, my entire professional career, basically with free money. They've been able to borrow money at anywhere from 2%, 1%, to 0%. And in Europe and in Germany and Japan, for example, 2 years ago, it was negative interest rates, which clearly indicates that the system was broken. There should be, people should be rewarded for lending money to any entity, including a government, that it controls the currency. It doesn't matter. You're still lending that government real money, even if they can print endless fake money, fiat money. It is a potential crisis. The Republican Democrat regime has partisanized itself. New term, new word. I like it.
Partisanized.
They have partisanized themselves and their constituents to the point where they don't do anything bipartisan except bomb people and children in the Middle East and start wars. And unfortunately, they still do that, both sides, somewhat pretty much equally. I mean, even AOC is like, yeah, send Ukraine lots of money to bomb people and fight wars, and don't worry about tracking the money. And, you know, the Republicans are supposedly the pro-war party. Both parties have, in my lifetime, spent trillions of dollars, wasted trillions of dollars around the globe on wars. And that stuff's expensive. And, comeuppance is a real thing. And I'm worried a little bit about it this time. Another thing you've read me over, if you've been reading me, John, I don't know how long you've been reading, but I know Cabana's been reading my stuff for 22 years or something.
15 years. Not always in the main newsletter. For over 15 years. Okay.
So yeah, you've also been around a long time. Thank you so much for being a long-time subscriber, both of you. And I've written a lot about how I don't think the reserve currency of the United States is really in trouble. I don't think the United States, as the de facto cleanest shirt in the laundry, is really in trouble. I don't think that the United States debt crisis is really a crisis. But I have, over the last 2 to 3, 4 years, started going, it could be. It could be a problem. And, I've gone from 1, maybe 3% chance of this stuff mattering to 10 or 20%. And just still, not highly likely, but it's probable enough, potentially enough, that I'm concerned about some of this stuff. I think we'll get through the debt crisis. I don't think the money market, I don't think that will be the crisis that will, like the history rhymes, it doesn't repeat. I don't think that we'll see the money markets break the buck.
I agree.
But for the record, as I wrote yesterday or last week, when someone asked, like, what is the safest place to be, debt crisis or not, I put it, look, it's Bitcoin, gold, and cash, not money markets. I did not say money markets. But Bitcoin, gold, and cash are probably something you do want to have exposure to right now. In the hedge fund, we've got a little bit of exposure to gold and some Bitcoin. And in my personal account, I've owned Bitcoin for 20 something years, and I've had a little bit of gold. That the gold that didn't get stolen by America's nurse's son 12 years ago, I still have. Yeah, that's the problem. I've had Bitcoin stolen. I've had gold stolen. I've had cash stolen. Like, nothing's safe. Man, I guess your bank account's not safe. If it's over 250,000. So
put your crypto on a hard wallet. It's safe.
Even then, I'll lose my hard wallet. Come on. Ask Bryce.
That's on you.
Where's my sunglasses? Bryce, have you seen a golf club?
Yeah.
Anyway, yeah, John, it's if I had to quantify it as a concern of money markets themselves, I'd say 5 or 10% chance that it's a problem. But 5 to 10% isn't nothing. And
right.
So yeah, if you're a little bit worried about it, I put it in cash and
I've reduced
the IC place as much as possible.
I've reduced. I'm also a registered investment advisor in Virginia, so I do manage money too.
Oh, well, thanks, man. Appreciate you being a subscriber.
Yeah, that's awesome.
What's the other question, John?
Oh, just the other one was just a real quick, because I know you wrote up Rocket Lab just a couple months ago. So I get some inside scoops on it from now and then. I've sent you a couple emails on it. I don't know if they've been helpful. I think you were saying buy more below 4, which it got below 4 for a little while, and now it's bouncing around. They just announced another new rocket they're going to be producing here. I don't know if you read about that yet.
Yes. And what do you live close to one of their facilities? Is that correct?
Yes, I can see all of their launches from the Wallops.
How fun is that?
Wow.
Center. Yeah, and I've got property over on the seaside where you can really see it well.
Oh, yeah, do you sometimes make a special trip just to watch the launch?
Yes.
Yeah. Is it as exciting as I would imagine it is?
It's really cool. Let me show you how exciting it is.
Please.
Here's one. Here's one. Let me get it to the camera there.
Oh, hold on.
Hold on. We're going to get you, make you big.
So, yeah, there you go.
Oh, wow.
So that's what we do. You go out to the beach and watch the launch.
Did you take that picture?
Yeah.
Wow. Very cool.
Yeah. So they're hiring 250 people here in our local area. And then our local community college is actually creating an aerospace engineering program to tie in to help bring jobs here for Rocket Lab and Wallops and other programs.
I mean, I'm hours away and I can still see the launches. So it's super cool. I mean, yours is way cooler, but
you don't have photos like that, Cabana.
Look off into the horizon and see this thing go up into the space. It's outstanding.
And if y'all are in near DC or Norfolk or Virginia Beach anytime, you're welcome to come to the Eastern Shore.
You know what, Bryce? Let's make a point one time in the next 6 to 9 months. Let's get out to that area for a visit. You know, we need to go to DC and network and stuff anyway. And we'll have to swing by. We'll try to time it so that it's by a launch, and we'll swing by John's property and see how it looks alive.
We can get a tour of their facilities.
Very cool. We'll take you up on that.
And if the CEO is here, he could possibly be available for people like you, not for me.
You know, we've had some calls with the investor relations head over at Rocket Lab, and I plan on talking to Peter Beck, the CEO, at some point. Probably be best to do it in person when we do it. So I'll try to make that happen.
All right, cool, awesome. Well, thank you,
Thanks, John, for being a subscriber, and thanks for being here today.
I appreciate you very much.
Well, thanks, man. And let's just hit on Rocket Lab real quick. We talked a little bit on Skytles yesterday. They reported, Rocket Lab reported earnings Monday night, maybe Tuesday night, whatever, a couple days ago. They basically met and beat the top line a little bit. I think they were expected 51.5 and they did like 52 something. Is that right, Bryce?
Yeah, like 54-ish, yeah.
Or 54. Mm-hmm. So yeah, they beat, by 5 or 10% on somewhere less than 10% on the top line, the bottom line. They don't have earnings yet, but they were the losses were not, as big as Wall Street had modeled. And the thing about Rocket Lab is that it is part of a very exclusive club. There's, again, longtime readers know that I've been writing several times in the last year. I've had ChatGPT or Google Bard create a matrix of all the developed countries in the world that do not have the ability to send things to orbit. And it's a much smaller list to list the companies that can send things to orbit. Australia cannot, England cannot. It's amazing the amount of countries that need access to space that don't have it. And Rocket Lab at $2 billion market cap at these levels, it seems like it'd be, free for one of Australia or the government of England to buy it and take it private. Can government take a company private? But they can't make it public because it's not a stock. That is a deep thought. Anyway, they should take it off the market and own it so that they have access, immediate access at any time to space. Same thing with Boeing. Boeing and the United Launch Alliance, which it's part of with Lockheed Martin. These guys, look, I don't want to say bad things about people that I've talked to. I know Tori, the CEO's last name is Tori, I think. Talked to him a couple of times. I don't want to disparage the company, but my gosh, they're not doing what they need to be doing. I mean, they've got rockets that blow up on the platform before they're even trying to launch a month ago. They've got launches. It costs them several $1 billion to get things to space. They could buy Rocket Lab for cheaper than they can do 2 launches and have a company that successfully launches every time. Knock on wood, most every time. So, yeah, man, I'm still a fan of Rocket Lab, the company. I still own the stock. I bought more when it was below 4. And
I may or may not have done the same.
Cabana probably did the same if I had to bet. Bryce, did you buy more Rocket Lab below 4?
I have not yet.
You probably should.
Yeah.
He paid up earlier for it. He's mad.
I think I'm up for it. I'm not mistaken.
I'm not happy, for the
Yeah.
record. I'm not happy that I started buying that stock at like 8, 9, 10. Sold a little when it popped after the IPO and then rode it all the way down here, and it's never come back. But I think long-term, Rocket Lab's going to be a winner. A big winner.
Well, since we don't have questions to go by in the chat room, and I've opened up the YouTube chat, so anybody who's watching,
I've got lots of questions here for you from the emails.
Okay, good.
I'll start copying and pasting them. Bryce, can you go into Trading with Cody email and start pasting them into the chat here?
Sure.
Yeah,
I'll get the first one.
Well, in the meantime, I got one for you. Maybe
Okay.
it's already been asked, but so this business with Rockwell Automation yesterday, and it's mixed signals because it's like the U.S. government is concerned about Chinese getting data, and then Rockwell's kind of like brushing it off. What's the scoop on that? Do you have any more insight on that one?
I don't have a lot of insight per se on it, but I can talk about it, at least what was reported. And look, the Wall Street Journal reported that the United States government wants to know more about Rockwell's China business and what they're allowing China to have access to. And as we all know, I assume we all know that the Republican Democrat regime, starting with Trump and now Biden, they're playing hardball with China. Probably rightfully so. Again, if you've been reading me for 20 plus years, for 15 years, I was writing about how I thought it was insane that Intel and Tesla and every other company on the planet would just go into China and build a bunch of facilities in a communist regime where it can get nationalized at any time. And they haven't nationalized that stuff, right? I mean, Tesla still owns their factories there and is selling cars there and making lots of money, as is China. I mean, as is Apple and Starbucks, and everything's fine. That might be too big of a word. Not fine. Everything is relatively okay. The tensions between the United States and China are rightfully escalating. China is a communist threat, and the United States is unfortunately, Republican Democrat regime is a violent, warring country, and our standing in the world has fallen since the end of World War II, when we were truly revered as saviors of the free world, to something less than that now. And China and the United States are at odds, and probably will be for a long time. Rockwell is operating in China, but look, the whole reason we own Rockwell is because of the onshoring movement and bringing factories and manufacturing back to the United States. The United States labor is too expensive here to make traditional manufacturing of commoditized goods like clothing or iPhones too expensive. But how do you make a factory these days in the United States? You use artificial intelligence and robots, and that's what Rockwell is the leading company at doing. So I think Rockwell it's a little bit expensive, but I think the growth rates that Wall Street expects for the next 3 to 5 years are low. I think the company will be growing faster with or without China for the next.
And you get paid to wait a little bit.
Yeah. What's the interest rate? What's the dividend on that, Cabana?
Oh, well, you put me on the spot. I can look that up real quick.
You brought it up. I thought you were like gonna know off the top of your head. I should know.
$1.18 quarterly. So it's a 1.75% yield.
Yeah. I mean, it doesn't cover a half of inflation right now, but it's better than nothing.
Yeah. And it could be like a growthier value play years to come. So.
All right. There you go. I posted a question there in
I
chat.
did. I thought you touched on it, but we can look more into the Rocket Labs.
Oh, I just grabbed the first question off of. I think we totally handled that one.
But yeah, post them all in there, and I'll just queue them up.
I'll mention this: that Rocket Lab is supposed to do 15. They've targeted a total of 15 launches this year, and so far they've only at 5. We're in May, so in order to get to 15 over the next 6.5 months, they're going to have to pick up their cadence a little bit. But I think they will. There's more demand for launch than there is supply, because there's Rocket Lab and SpaceX are basically the only 2 companies right now doing launches. Blue Origin is on hiatus for about a year because they had something blow up last year and they're trying to figure out why. And they're having a hard time figuring it out, apparently. And Astra is no longer launching. You know, like, it's very rare to find a company that successfully launches regularly. So Rocket Lab's in a great position for that.
Right.
All
While
right.
we're waiting on more questions, I see, like, it seems like every day we got like regional bank, I guess, distress and bad news, and then a couple days, you know, they're up 7% each. Today, I guess a lot of them are down. So I guess a two-parter while we wait on this is, do these ever become interesting? I know they're not revolutionary investments, but at what point do you make the decision to be like, okay, this does seem like a little cheap for me? And do you ever make that decision to step in on a non-revolutionary investment, or it's just let it play out, it's too difficult, there's too much emotion kind of thing?
Not necessarily too much emotion. Let me repeat your question back, because I was grabbing an email for you.
Sure.
Bryce doesn't have the password for Trading with Cody email, apparently. Ask Lori for it if you would, Bryce. I don't know it off the top of my head
Okay,
either.
I will.
You're asking, do I ever invest in non-revolutionary things, and why would I? Is that correct?
Yeah, and I think you do. I've seen you do some over the years, especially if the opportunity is so overwhelming. You're just like, okay, I'm going to take a nibble at this kind of thing.
I have, right? Like, maybe you're referring to like buying Campbell's at the exact bottom of 3-4 years ago.
Not revolutionary, but
one of the things that you can do, and I did with Campbell's, is you can make almost anything revolutionary. Like when Nike hit $90 last year, I did a bunch of work on it, and I was like, you could space sports is going to be huge. But I mean, gravity-less basketball? Are you kidding? How much fun would that be to watch? Gravity-less soccer.
like
Can you imagine the ball just zooming around off of walls, off the ceiling? It would be so much fun to watch gravity-less sports without gravity. So I guess actually track and field would suck in space, because that would not be fun. But any sport with a ball, like, could you imagine the par 5 in a gravity-less golf course?
Your drive is like miles.
Literally, like, and then you hop in a little golf zoom spaceship. Picture it's almost like the Jetsons, zooming through to the ball. So Campbell's, they have distribution network to get their food into every bodega and grocery store and dollar store on the planet. The distribution that Campbell's owns is revolutionary. It's also a little bit Mafia-like, because, like, that's the problem with buying groceries, is you ever notice, like, how is it that there's just like 4 brands of bread in every grocery store? I mean, clearly there's something Mafia happening there, where like the mob is not letting the other competitors have distribution rights, and they'll break your legs if you try to get in the grocery store. I'm exaggerating a little bit, but there's like, they use the United States Republican Democrat regime to protect themselves from competitors at that level. And for the record, isn't the United States Republican Democrat regime a little bit of a mafia itself? Like, they extort us for money to protect us from it.
I think quite a few dead people would argue that, but they're not around to do so. So
I'm alive. I'm arguing it for now anyway. When I used to say the stuff on Fox Business,
oh boy,
I was pretty sure I was being followed sometimes in New York when I had when I was almost famous, and I would say things about the Republican Democrat war machine and the socialist regime.
I don't really doubt it. I mean, he had Tucker Carlson leave, and I mean, his apps in his phone were provingly tapped by the government. So you could be very well right. They were on.
He's saying the stuff that he's saying the stuff that the government wants to hear, at least on air. In his private texts, he was not saying what they want to hear.
That's right.
But
Right.
on air, he's following the script. I didn't follow the script on air. I'd get in the elevator and who's the guy who got fired for the Loof? Bill, the night
O'Reilly?
Bill O'Reilly. Yeah, he'd get in the elevator and be like, Cody, can you please quit saying Republican, Democrat, socialist regime? I'm like, no, I will not, Bill. And then he'd ignore me. He never talked to me except to yell at me.
You say, we'll do it live.
I don't know if you guys know what he's referring to there, but
Go look it up on YouTube.
yeah. Type in Bill O'Reilly. We'll do it live.
Yeah.
Fuck it. That's really what he said. All right. We got more questions. I'll get
Next
more out
question.
of the emails. Keep going.
Question: how do you see the market shaping up for the rest of the year in terms of valuation and risk levels? And that kind of was on my mind a little bit because I'm seeing it's interesting that things have kind of shifted because we have the Dow kind of being stagnant or weak, and tech like is a safe haven. Oddly enough, you have like Microsoft, Apple, even Google's coming back a little bit now, even Amazon a little bit. Like these are the safer ones in quotes lately. How do you see the market shaping up for the rest of the year?
Look, in my personal account, I've owned Apple. I'm not joking, since like 15 cents a share, split adjusted in March 2003 when Steve Jobs came back and Kabani, you probably read my article about that.
I'm pretty sure I did. I was in on the Google IPO. That's how far we go back even before that. So, yeah.
I bought Google the day it came public, not before it came public, but in the open market. I bought Facebook a month after where it came public, and it dropped from like 35 to 20. I warned everybody, don't buy Facebook at the IPO because everyone I knew had access to it, and Mark Zuckerberg smartly got every dime he could out of Wall Street to put on his balance sheet. But these things, the problem with tech right now is what you just said. It's perceived as a safe haven. It's not safe. The valuations are stretched across the board. Apple is more expensive on a price to earnings or any other metric that I've ever seen it at. I mean, when the company was growing 30 to 40% per year for 15 years after I first bought it, it traded at a 12 PE, 10 PE, 8 PE, maximum 15 PE. It's now a 28 PE. And it's not growing. This year it will shrink. Last year it was flat. It's got its ecosystem. It's got the installed base. It's got all the reasons it's been revolutionary. It's a platform that's unique and has got critical mass of developers and users. All the reasons I've owned it for 20 years still apply. But it is expensive, and it is not a safe haven. Tech is not a safe haven, not at these valuations. So, look, I think the banking crisis is probably not entirely over. I think there's a major bank or two that's got problems.
Wells
Fargo, Bank of America, probably.
Okay.
I think because
that's not what you would hear on, a financial network. Those are the safe havens. According to what we hear, it's like, oh, well, JP's fine. Wells is fine. They're too big to fail. Bank of America's fine. It's the regionals you got to worry about. So you're saying,
look, I'm not saying they're about to fail or something, but I think Bank of America has a huge hole on their balance sheet with growth, with loans they made at very low levels, interest rate levels on commercial real estate around the country that is now lost half its value or a third of its value. And they're going to have to take write-downs. They own treasuries that they have real losses on, that they bought when interest rates were 1%, and now interest rates are 5%. So there's a big loss on those. There's losses across the board in these financials. And look, I don't think there's anything safe right now. I know it feels like the market is relatively safe and that we're at a spot where, like you can just sort of ride it out and things, but I wouldn't call myself bearish. I have not been calling myself bearish for the last month or two, but I have been talking about caution. And since the blow off top, when I did turn outright bearish in November of 21, 18 months ago now, I was bearish for about 6 months or so after that, maybe even a full year. But I haven't been bullish since then. I've remained cautious. And it's not like I think we're going to crash or something, but I've been saying for 18 months that it's going to be hard. It's not easy. You don't get to buy a random small cap stock and it goes up 1,000% for no reason, which is what was happening for, during COVID and immediately after. Any stock you bought went up 500 or 1,000%. The worst fraudulent, stupid, small cap penny stocks went up 10,000%. I mean, it was insane, the bubble we went through. That bubble is over. There is no free money out there sloshing around. You don't have people in Europe desperate to get their money to somewhere that has a 3 to 5% yield in a stock. They can get 3 to 5% yield in treasuries. 3-month treasuries paying 5% right now. That's a very different demand scenario for assets. Used to, truly, when we talk about savers being punished at 0% interest rates by the Republican Democrat Federal Reserve machine, it's forces. The reason we say that is because if they don't move their money into stocks or cryptos, they get left behind. But at a 5% interest rate, you're not punishing savers. They're being rewarded for lending you money. And they will do that. There are millions of people who are like, I don't buying stocks at 18 PE. I'm not buying the S&P 500 at an 18 PE. I'm buying real treasuries from the United States government for 5% interest. And that money's going there instead of here. And I think the market has some hard times here. I think we'll have to muddle along with various rotating sectors. Oil was all the rage at the end of last year. Energy was through the roof for 2 years in a row. And everybody's like, yeah, oil, energy. And as you know, last year, one of my predictions at the end of the year was that oil would trade down to a 6 handle. It did that.
We got it.
Went from 100 to 60. And it's not going back to 100 next week, in a year or two, maybe. But oil, we'll have these rotating things from staples are safe to tech is safe to energy is safe. None of it's safe. It's all hard. It's all going to rotate. And at feet to fire, I'm going to say the market's probably a slow grind lower for a year from here. You got to earn your money with stock picks, not just buying assets.
There you go. Well, things have picked up in the chat, so we might have to do more of a rapid fire.
All right, I'll pick up the pace. Thank you.
No problem. As we're a little bit more than halfway through. Question on Intel. Is Intel still on track to save America and become our domestic chip supplier?
Great.
Save America.
Well phrased question. Very well phrased. That is hilarious. Let me paste one more question here as I answer it. Is it still on track? Yes, it is. They are building the fabs in the United States that will be making high-tech chips that Apple, Tesla, NVIDIA, and the rest of them will need. It is extremely risky. I'd say there's a 20 to 30% chance that China does something with Taiwan, whether it's an outright invasion or some sort of other political levers they're pulling or something. But I think Taiwan, where Taiwan Semiconductor is, which is the company that makes all the most advanced chips for United States-based companies that we all own and talked about here so far, from Meta, Apple, Google, Tesla, they're all using Taiwan Semiconductor, NVIDIA, to make these chips. They need a domestic supplier. Now, Taiwan Semiconductor is also spending like $40 billion in Arizona to build fabs for these companies, to make these chips for these companies. And, I think they'll continue to do that. I think Intel's going to catch them. I think Intel's got the wherewithal and the money, access to the money, and the access to the ASML and other advanced lithographic equipment that's required to make the most advanced chips. And the government of the United States is rightfully trying to help Intel. Maybe, look, I don't think the government needs to write welfare checks and build the factories for Intel or anyone else. Intel should have to do it on its own. But the government is rightfully helping Intel become a major Taiwan semiconductor supplier with access to the technology, and help basically telling ASML and others, you have to sell your most advanced stuff to Intel before you sell it to Taiwan Semiconductor over the next 2 to 3 years. And I think that'll play out.
Well, you did say a word in there that caught my attention, but it has no relation to Intel. Advanced. So Advanced Micro, AMD, of course, they are catching, a nice updrift because AI is the key word. So if you want your stock to go up, talk AI, get an AI partnership. So Microsoft and AMD are supposedly talking about something. You see something possibly for Intel? Because I think everybody's going to be like, well, what's Intel going to do regarding AI?
Did you guys happen to see yesterday? Bryce got the emails out. Thank you, Bryce. Did you guys happen to see the Google presentation yesterday? And more importantly, did you see the remix of Pinchar, the CEO from Google's commentary yesterday? Come on, if you could just go to Twitter and type in Google AI video, I'm sure it will come up. It was on my feed 20 times last night. It's basically a remix of his presentation yesterday, and it goes like this. Google AI, AI, AI. We have AI. We have lots of AI. Google AI, AI, AI. And the stock went up 5%. And that is an indication of the bubble that we're still dealing with. It's not bullish that you can make your stock add $150 billion of market cap like they did yesterday at Google by saying the word AI 17 times in a presentation. In the communication, in the .com bubble, if you had the word .com, internet, or communications, there you go. Yeah, it's 15 seconds. That's it. Hit that.
AI, generative AI, generative AI, generative AI, AI is AI, 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 AI. It uses AI to bring AI, 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 AI.
Old MacDonald had a farm.
AI.
Yeah, thank you. Made that up right now.
Yeah, I was with you.
Yeah, thank you. My Amaris listens to a lot of Old MacDonald on her iPad, so it's in my head anyway.
All right, we got a lot to get through. Next
all right,
one.
I'll pick up the pace.
Let's go. I'm reading that the Metaverse. This is.
Wait, I want to finish. Intel, yes, Intel has AI potential. They have lots of thing, not rendering. There's another word. I've lost the word. Intel is benefiting from AI spend in the network, and they might actually end up being a major player in AI 3 years from now.
Okay. Trading with Cody question. I'm reading that the metaverse is dead with AI exploding and what appears to be Meta's sudden shift to AI. There's that word again. And deceleration from the metaverse. You think that is too accurate or too early to tell?
I think it's both. It is accurate that metaverse is a bad thing. If you came out, if Pinchar yesterday came out and went metaverse, regenerative metaverse, his stock would have been down 8% instead of up 5% for saying AI. There is baggage with the metaverse right now, but look, the whole point, the only way the metaverse is going to work, and it will work, is when they got goggles that are like this. These are actually, by the way, Ray-Ban. I can take pictures and listen to music with these things. I can record Bryce hitting a slice at the golf course with these things.
Which are partnered with Metaverse, right?
Which, correct. They're literally, you have to download the Facebook app, which I didn't have on my phone until I got these glasses.
Is that Bryce's name on the course, Slice and Bryce?
Oh, wow. That is good, Cabana. That's a
don't put that on me.
Forever with you, man.
His problem's not Slice. It's the other one. What's it?
The hook.
A hook.
Oh,
Yeah, he hooks. I slice.
Okay.
But I'm going to go with Slice and Bryson. That's awesome. Bryce the Slice. Anyway, look, when the metaverse is this, it will work. And Metaverse, the company, Facebook, will be the leader in it because they've got the critical mass to get there. Apple will probably also be there by then. Google, Android, something will be in there too. So yeah, it'll be big in 5 years, but they got to get you can't walk around those stupid Oculus goggle things on your face for very long.
Trading with Cody question, where do you think two-parter, where do you think residential real estate is headed over the next 1 to 2 years? And you kind of touched on NASDAQ, I guess, for the rest of the year, and gold a little bit earlier. Where do you think gold and the NASDAQ are into year end and maybe a time period of like 5 years out? I would think residential's more regional, really, because you got a place like Florida that, is hot, but you have others like maybe big cities that are toning down. But
the phrase on Wall Street that you've probably heard a million times, Cabana, that you're referencing is all real estate is local. But it's not necessarily true, as Ben Bernanke found out when he got slapped in the head 15 times in the 2008 financial crisis, as all real estate went down together at the same time. And I think we're probably closer to that right now, that the latter, that the entire real estate sector bubbled up wildly. You had the artificial interest rates being too low, driving up demand and prices. You had Airbnb models that were, random hardworking blue collar people were bought 4 or 5 homes in their area and put them on Airbnb or VRBO. And there's been a bubble in real estate across the country. And it's, you got the macro factor of higher interest rates working on every locality. There is no 2% interest rate in Florida. It's still, you're borrowing money at 8 to 10% now, and valuations have to come down to deal with that. Doesn't necessarily mean that real estate's going to crash like it did in 2008, but in 2009. But I like the stock market. I think real estate will be a hard business for the next 3 to 5 years until we work through the downside of the bubble, which is not necessarily a crash, but at least has to be churned through to a more healthier spot. I would be concerned. I've sold all my real estate in Ruidoso. I had 2 offices, a house. I guess we had 3 offices and a house. Sold it all. I'm owning my home in Carrizozo now, but I don't have any income generating real estate. I don't like real estate here.
How about gold and the NASDAQ? Quick take on that before we get to the next one.
Gold, I love. I think it's a great defensive place to be. I've owned it You know, we put it in the hedge fund 6 months ago at much lower levels and haven't sold any, and probably bought some more in the last month or two on downturn anytime it's down at all. Yeah, over the next year, I think it's flat to up from here. And 5 years from now, I think gold's doubled, maybe even up 150% from here 5 years from now.
It's a good looking chart, that's for sure. Hi, Cody. Do you get the feeling that if there's a recession, this would be the most predicted recession of all time? Does that make you want to flip it?
I love the question. And again, longtime readers know that I love to flip anything that's traditional, conventional wisdom, turn it on its head. And there's our edge. If you want to be average, do what everybody else is doing. If you want to take risks and actually beat the markets and do something different than everybody else, you got to actually flip their logic and do things different. I don't know that it's that predicted. At this point, I think most people are whistling past the recession graveyard. Number one, I think we are already in a recession. The traditional measure of a recession is 2 down GDP quarters in a row. We had that last year. And somehow the Biden administration convinced all the media and even Republicans to be like, it's not a real recession yet. But it was. We went through a recession. We're still sort of bumbling in a recession. It's a matter of semantics at this point. We are in a recession. It's whether it's predicted or not. No, it's denied. Nobody wants to admit we're in a recession. They're worried about a potential recession. Hell, by the time they actually think that they're saying that we're in a recession, we'll be out of the recession. And the market will probably be down from here when that happens. And then we'll have the buying opportunity. But I want to flip it. I don't want to be bearish, man. I don't want to be cautious. I want to love these stocks. I want to buy everything, cover all my shorts, get out of my puts, and make a 80% year this year.
I guess this one.
You don't always get what you want, to quote the Rolling Stones.
The Stones.
There you go. Good catch. Nice.
Thank you. This one goes along with that, I guess. Just, I guess, as an aside. There are people I respect that say the markets will have a big 10 to 20% drop in the second half. And some of whom I respect say the low is in. So I see that every day. It's the ever-going argument. Are we going to make new lows? Or are we going to bust out of this range? Not asking how to invest, but do you think there will be better valuations at relative to today?
Yes, I do think there will be better valuations relative to today to buy most everything. I think we're in an asset bubble still, and we're trying to get out of it. And time and price will make it happen. Prices don't have to crash, but earnings have to grow. Economy has to grow. And we could stay here at these levels, and then the valuations get better. Yeah, man. I don't know. It's, I don't know what the markets are going to do, but yeah, I think the NASDAQ, both can be true. The bottom can be in, and the NASDAQ can go down 10% from here. How high? The NASDAQ's 35% off its low from December last year. In my head, I think that's about the right percentage. So yeah, it can drop 10 or 20%. And that doesn't hit those lows. I don't think those lows are magical either, though. We could challenge those lows. We could break those lows. And one thing to remember about investing is so often you get fooled into thinking you're just riding an escalator and suddenly you're on an elevator, straight down. Stocks go up like an escalator and they go down like an elevator. And, that potential is here. You can have a 5 or 10% whoosh down at any time.
I think we're close to the end here. This might be it. Second part of that subscriber's questions. FANG has moved up off of last year's lows. Is it too late to get back in, or do you see these stocks significantly higher by year end? You touched on it a little bit. I mean, the stretched valuations of an Apple and, but do you have any more to add to that?
Yeah, look, FANG, Facebook, Apple / Amazon, NVIDIA / Netflix and Google, which is actually Alphabet.
Alphabet, yeah.
So it could be Fan.
And yeah,
It's crowded, man. Even these questions hint at that crowding, the FOMO that this particular subscriber is feeling, the fear of missing out. Is it too late to make money in Fang? Oh, I want to make money in Fan. I think it's too late. I mean, they can all move up another 5, 10, 15, 20% from here. And then, if that's your goal, it'll work out fine. But, 5 years from now, I think Fang will probably, each one is going to do its own thing. They don't trade in tandem anyway. But 2 out of those 3, 2 out of the 5, 2 or 3 out of those 5 will be flat to down from here 5 years from now.
I mean, if Facebook is Meta and you have all the A's and N's, wouldn't it be like man?
Oh, I forgot Facebook's Meta now. You're right.
Yeah.
Man.
Oh, man.
And that's sort of what I think. Like, unfortunately, I think it's going to be hard. You don't get to I own those in my personal account. I haven't sold them. They're forever positions. I don't own them in the hedge fund right now. It's crowded. Everybody wants to be in Fang. Everybody wants to be a revolution investor. Everybody wants to be an innovation genius. It makes my job hard. It's so much easier for me to flip it when everybody's bearish and hates tech. And that's when I've made all my money. And we are not in that sector, as evidenced by the questions we're getting today. People want to own Facebook, Apple, Amazon, Netflix, Google, and maybe Intel, and Rocket Lab, but that's because I talk about those 2 endlessly.
That brings us, I think, pretty much to the end of those questions. Any other stocks you want to talk about? I guess Uber had a great quarter recently, and Trading with Cody subscribers read, I guess, a great write-up on that with you and Bryce within the past, I don't want to say 2 months, maybe. Picking that out in advance. So that was a great write-up and analysis, and we saw the stock maybe finally break out from here. What are your thoughts on Uber?
I like how you phrased it, man. It might have broken out here. It also, like everything else, could be a hard upside for a little while as the markets digest ups and downs here. But Uber has won. They beat Lyft, which I've been saying since they both came public was going to happen. And, you've got the logistics hauling business, which is very uncovered and people don't really know much about it, but it's going to beat the old-fashioned JB Hunts and CHRWs of the world that are, that you see, Swift, these trucking companies. Uber's going to beat them. Uber's got a more efficient network. It's got AI to run that network. It's going to handle it better than those traditional models do. You obviously have Uber Eats, which I never travel anywhere from. If I go, we don't have Uber Eats in rural New Mexico. But if I go to Albuquerque for Ameris for 2 days at a hospital, I am ordering like the highest rated Japanese, Chinese, Italian, something. If I'm in Austin for a trip, I'm Uber eating every night. I love the Uber Eats. And then, and Uber, obviously, it's a verb. And let's Uber over to our friend's house tonight and have some drinks and then Uber home and not have to drive. And the biggest threat to Uber is not a real threat. I think the most cited threat to Uber is self-driving, full autonomy from Tesla and others. But the thing about Uber is it's got the money to just buy a whole fleet of self-driving cars day one. As soon as full self-driving is here or right before it gets here, Uber will be buying a fleet of self-driving cars, and then their margins go through the roof. By far the biggest margin for Uber is
The drivers.
The drivers. Eliminate the drivers, and unfortunately that'll hurt a lot of people's income, but it's more efficient to let a robot software drive you around and deliver your food and packages to you. And Uber's going to do it.
There you go. One late arriving question from this user named John in YouTube. Oh, wait, no, he's here on screen asking about the revolutionary industry of regional banks. John, what's your question?
Not revolutionary, just taking advantage of a flip situation. Any thought? Are you avoiding it?
Am I vote? I'm avoiding the regional banks. I have no edge there, right? I mean, the problem is, and Bryce about once a week is like, we got to short the regional banks, Cody. And I'm like, I don't disagree. Like, if I had to choose to buy or sell or short regional banks, I would short them on a pop. But I don't have to. And I'm a Revolution investor. And in the hedge fund, people know what I'm trying to do. And we'll occasionally nibble something that's, demolished in the hedge fund that's not a quote unquote revolutionary company. And you guys have seen me do that on my personal account too over the years. But no, I'm not interested in trading the regional banks right now. I don't have an edge. Everybody on the planet is an expert on regional banks all of a sudden, and I don't want to compete with them.
Thanks.
Well, that is that. We have a couple minutes left. So you spoke of something being demolished. So that brings up, I guess, to my mind, like a Wolfspeed and MP Materials. Do you have some closing thoughts on those before we call this a show and wrap it up? Because those have been demolished, but MP's earnings weren't all that bad. Reporting, earlier, Wolfspeed, went down quite a bit. But if we're playing the long game here, it might be a very good opportunity. What's your take?
Well, it's a good question. So they're very different. MP is executing. Both companies are speculative, longer term investments.
And another great write up, by the way, for tradingwithcody.com subscribers.
Thank you, Bryce.
Yeah.
So the MP is unique in that it's like Intel in some ways, or Rockwell, that the onshoring revolution plays into MP. MP is the only United States supplier of rare earth materials, and we need rare earth material supply in the United States. And so the government itself recognizes that and is giving MP welfare and protections and help. And 5 years from now, I think MP will be making battery magnets themselves, the finished product for EVs, for wind turbines, for all kinds of different products. They all need magnets. So, yeah, I think MP's in a good spot, and they're executing. Wolf is not executing. The silicon carbide revolution in the semiconductor industry is real. It's a better chip. It's going to be a less expensive chip over time and a more capable chip. It's going to follow Moore's law, taking semiconductors to a new place. But I don't know if Wolf is going to win. Wolf is perfectly positioned to be a huge winner, but they've got to execute. They got to get their factories up, and they haven't. And so there's an execution risk on Wolf, despite its positioning. And there's obviously an execution risk on MP too. I mean, they've been executing, but that doesn't mean a year from now they still will be. These are tough businesses, and but they are very revolutionary. And in 5 or 10 years, silicon carbide will be a $1 trillion business, and there will be huge winners in that industry. Magnets, rare earth materials will be hundreds of billions of dollar business, and MP will probably be a beneficiary.
Boom. And with that, we are coming up on our hour. We've answered all the questions. So thanks for everybody in the chat.
Hey.
And whoever emailed their questions in.
I have a bunch. I found a box of 1 year anniversary baseball caps of Trading with Cody. See, look at that, March 8th, 2012. So we've been around for 12 years on this particular product. if anybody wants one, you're watching, shoot us an email, support@tradingwithcody.com. Put your address in it. Bryce will help me ship them out to you. Yeah.
Get the merch.
Get some free merch. Thanks for being here, people.
Well, that'll about do it. Thank you, Bryce, John, for being with us. As always, thank you, Cody. This was a lot of fun. Always.
Cabana, thank you.
Yeah, thank you, Cabana.
You had no reason to show up early on a Thursday morning and host
Yeah.
it. I texted Cabana last night at like 7:00 his time, and I was like, "Hey, can you host a call tomorrow for Trading with Cody because our website's not working?" And he was like, "Absolutely, I love doing that stuff." And I appreciate it, man. You nailed it as
Great
always.
job.
You do great on these.
No problem. My pleasure. I love doing this stuff. So, yeah,
Thanks.
maybe we'll do some, in a couple months. So,
We will. We'll
as
do
always,
another
stay tuned. Hopefully, we'll have the chat room back up shortly. And yeah, see you there.
Thanks, everybody.
Awesome.
Good
Thanks.
trading. Good investing.
Thanks.